please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
2017 has been a year of disruption, chaos, theatre, with the mark of policy actions, courtroom judgments and even boardroom battles.
Well, indeed, Ashpreet, and we're likely to see the consequences of some of these developments long after the clock strikes midnight on December 31st. Let's, in fact, on that note, begin with the most dominant news story of the year 2017, the goods and services tax.
Certainly, Ashmit, this has been pitched by the government as the biggest tax reform after the independent India came into being, with the government going ahead and passing the GST bill in April. But that is the government narrative, Ashmit.
Well, indeed, the initial euphoria, however, seems to have given way to teething problems. And more recently, the numbers that have come out have raised questions, in fact, about the government's claims of increasing tax compliance. Timsy Jaipuria and Sapna Das bring us this recap of the GST journey.
I think we are in a state of readiness. Minister after minister have met me from the states and said, don't blink, stick to 1st July.
And blink he didn't. The finance minister stuck to the July 1st GST rollout deadline. And with the May meeting of the GST Council in Srinagar seeing 31 states and union territories fixing individual tax rates for goods and services for the first time, GST was born on the midnight of June 30th in the central hall of the parliament. Though opposition parties gave the shindig a cold shoulder.
कानून भले कहता हो कि गुड्स एंड सर्विस टैक्स, लेकिन हकीकत में ये गुड एंड सिंपल टैक्स है.
Good it may be in long term, but the tax has proven to be far from simple so far. In the 6 months since the birth, GST has been plagued by infantile complaints from a rash of rate changes to clocky taxpayers. Less than 3 weeks into the tax, the council hiked the GST compensation cess on cigarettes and tobacco to bring it on par with pre-GST rates. This would net it a neat 5,000 crore rupees. Again, on the 9th of September, the GST Council hiked the compensation cess on mid-segment and luxury cars, bringing tax on these items at par with pre-GST rates. But it also reduced the tax rate on 40 commodities, many of them daily use items. The spate of rate cuts continued in October, impacting 27 more commodities. At this meeting, the composition scheme threshold was also increased from 75 lakhs to 1 crore rupees. But criticism continued.
GST, Gabbar Singh tax, इससे देश को नुकसान हो रहा है.
And so did the government's rate revision exercise.
There is a need for rationalization. Instead of doing a piecemeal reduction here and there, we do need to look at the entire list of 28%.
And so on November 10th, taxes were slashed on a massive 210 items, 178 of which were brought down from the 28% bracket to the 18% bracket. The full fiscal revenue impact of just this exercise was pegged at 26,000 crore rupees. This was also the first meeting after which Finance Minister Arun Jaitley said a 3-tier GST rate structure can be looked at in the times to come. But through all this, the government took flak for a GST network that was far from optimal. So the government yielded to rising complaints and decided to relax the return filing dates for GSTR 1, 2 and 3 and added that while 3B returns need to be filed, these would only be up to December. Also in October, the council decided to constitute a group of ministers now headed by Deputy Chief Minister of Bihar, Sushil Modi, to monitor and resolve IT issues. But this frequent rate reduction, less than satisfactory compliance and tweaks to the processes have taken a toll on government revenues. From a revised high of 94,000 crore rupees of GST collections in July with 58.7 lakh 3B returns filed, October collections fell to 83.346 crores with 50.1 lakh 3B returns filed. And November collections are down further to 80,800 crores with 53.06 3B returns filed. The troubles are far from over, and more tweaks and clarifications and seals on the wrist can be expected through 2018, starting with the next GST Council meeting on the 18th of January. In New Delhi with Timsy Jaipuria and Sapna Das, Ashmit Kumar.
The IPO market saw the biggest beneficiaries with a change in the household savings patterns, and the company made hay while the sun shone.
Indeed, and well, Yash Jain and Areeb Sherwani report on as many as 153 IPOs that hit Dalal Street in 2017, raising as much as, hold your breath, $11.6 billion, a figure no one had expected when the year began.
Till now, amount raised is rupees 9452 crore, and IPOs of over rupees 50,000 crore have been filed with SEBI. So the trend is very good, and I'm sure by end of this year they'll be raising through IPOs will all be perhaps all-time high, at least in the recent times.
He was right. Thanks to the continued perception of political stability and the government's continued efforts to push its reforms agenda forward, 153 companies made a beeline for an address on Dalal Street. In all, these companies raised a whopping 75,000 crore rupees, more than double the numbers for 2016. But what makes 2017 really remarkable from an IPO perspective is that not one of the 153 public issues, and we're not counting secondary issues or ETFs here, were given the cold shoulder by the investing public. That's something that has not happened in at least 10 years.
For me, it's just the beginning. Overall, if you look at it, the way we have been calculating is that over next 10 years, India will require close to $2.5 trillion from debt as well as equities.
2017 also saw the third largest IPO in Indian corporate history, with GICRE raising over 11,000 crore rupees, even though investor response to this issue was more tepid than usual for a public sector giant. But in sharp contrast, issues like the 400 crore rupee one from Capacity's infra projects were subscribed 183 times, a clear indication that investor interest was high, as was risk appetite. Interestingly, companies weren't vying for a spot on just the mainstream trading platforms. The small and medium enterprise platform also saw frenzied activity. 138 companies were added to the platform this year, together raising over 1,700 crore rupees, as against 69 companies that raised 537 crore rupees in 2016.
One of the highlights of the IPO calendar in 2017 was that a lot of companies from the BFSI space made their debut on the exchanges. 2017 was also the year when India's oldest equity exchange, the Bombay Stock Exchange, began trading. And as things stand, this IPO frenzy could continue through 2018 as well, as companies intending to raise over 60,000 crores have already filed their application with market regulator SEBI. In Mumbai, Yash Jain.
Well, 2017 brought with it an era of disruption and consolidation in the Indian telecom space. We saw big-ticket mergers and acquisitions and game-changing regulations in the sector.
And not just because the 2G court went ahead and acquitted all those people who were accused by the CBI and the Enforcement Directorate as implicit in the 7-year-old 2G scam, Kritika Saxena takes a walk down memory lane.
The story of the Indian telecom sector in 2017 had all the ingredients of a pacey Bollywood film.
The protagonist was Mukesh Ambani's Jio, which disrupted the industry with the lowest tariffs the country has ever seen. This had rivals like Vodafone, Idea Cellular, Bharti Airtel run for cover. Already reeling under a high debt burden, these companies were forced to cut tariffs. The resultant pricing pressure meant that something had to give.
And it did. So while 2017 started with 7 telecom players, it ended with 3. Much like Airtel Sunil Mittal predicted when the year began.
I would say if you meet sometime next year here, you could be finally down to those 4 players in the market.
Vodafone and Idea Cellular got the ball rolling by deciding to merge their India operations.
Basically, it's about the coming together of 2 companies who have huge complementarity, especially in terms of the assets that they own.
Once done, the deal will give birth to India's largest telecom operator. But Airtel has also been busy. In February, it acquired Norwegian firm Telenor's India operations and then went on to buy Tata Teleservices' licenses in India in October. That left Anil Ambani's Arcom. Now in 2016, Reliance Communications had agreed to merge with Aircel. But with its debt burden climbing to 45,000 crore rupees and multiple lawsuits being filed against the company in the NCLT, that deal fell apart. Towards the end of 2017, Arcom has been trying to stave off being taken over by its lenders and hunting for buyers for its various assets. Aircel, meanwhile, is in the process of winding down its India operations. But consolidation was not restricted to operations. India's telecom infrastructure landscape saw a shake-up as well, when ETC acquired the tower businesses of Idea Cellular and Vodafone for $2.1 billion, and Bharti Airtel decided to explore options to buy Indus Towers. This does not mean telecom players were given a breather by policymakers. The government threw a curveball by cutting the interconnect usage charges for telecom operators from 14 paise to 6 paise. It's a move that has hit incumbent players like Bharti Airtel, Vodafone and Idea Cellular, since these charges account for nearly 4 to 6% of annual revenues.
The year 2017 played out like a typical Bollywood film. But just because the year has ended, that doesn't really mean that the entire telecom movie has. As 2018 draws near, the sector is awaiting the final recommendations of an interministerial group of telecom mandated to revamp and reform the sector. Additionally, the government is likely to finalize the net neutrality guidelines in the country in 2018 to level the playing field between OTT players like WhatsApp and Skype and traditional telecom players. In other words, picture abhi baki hai. In Mumbai, Kritika Saxena.
Well, clearly the buzzword for 2017 for the telecom sector has been disruption.
Well, indeed, and as we saw in the 2G verdict, disruption is something that the courts caused in the year 2017 as well. We bring you a snapshot of the biggest judgments on the other side. Keep watching.